Bitcoin's bottom may have been put in, and we've outlined this over the last few days with the bullish divergences forming both on the RSI and on the money flow. But we highlighted this especially on my Twitter here at Kellam. Make sure you're giving me a follow, keeping you on the right side of this trend, but also the setup coming into this likely bottom formed with the breakout of this downtrend resistance that has been in place since that top up here at $124,600. And we see this all the way down, finally breaking out. But the key point here is the pullback on this breakout that retests the previous resistance to now flip to support, which is not only this downtrend resistance, it's also the tops of all of this price right in here, where the price action now is broken out and broken past this previous range high right here. Now, beyond that, we're seeing other major things in the chart. In fact, even the liquidation heat map, this was just before we went live about 2 hours ago. And just notice these hot zones up here. We talk about the price action going and basically getting like a magnet pulled up into those zones. And let's see how this played out, because this again was about 2 hours ago what this looked like. Let's see what the price action has done since. Oh my God, it came up and was like a moth to a flame, getting sucked into that area. The question is the bottom really in, or is this just a bull trap? Make sure you click the link on the bottom side of this video. If you're watching this as a short, watch the full length, and everybody else, hit that like button, hit that subscribe button, ding the bell. We're going to be getting going here in just a moment. Let's get it. Oh yeah. I know that I've been stacking. Hopefully that all of you have been stacking as well, but we've got some major signs and signals that we've got to pay attention to, because the best is yet to come in this market. And I hope that you're all paying attention so that we can make sure that we are on the right side of everything going on here, because we've got some major things that are brewing right now. And do not get left behind because you're making silly decisions. Everybody, I want to see you GM the city that you're in and the last thing that you bought. Don't say how much, but say, like for me, GM, Atlanta, chainlink. That's what I would say in the live chat. I want to see you guys get active, but let's get into this. Let's talk about what's going on in these markets. Let's look at these signals. Let's go. What is up, everybody? Welcome back, BitLab Academy. Good morning, good afternoon, good night. Welcome to the show. My name's Kellam. Welcome to the family. If this is your first time, I can guarantee you it's not going to be your last time. I am at the new studio. You can see I got naked walls right now, but I'm waiting on a couple things to be delivered. And so you'll see some things pop up on the walls over the coming days. But shout out to everybody here. We got New Brunswick, Canada in the house. What else? We got Rockwell, Maryland in the house. How you doing? 2 people. Seattle, 3 people that have interacted with the thing that I just asked every single one of you to do. And we got 216 people here. I know we're about to have 1,000. We'll probably get up to about 2,000 or 3,000 live on the show. Shout out to everybody that's here. Hopefully you guys have been stacking and not getting chopped out with everything going on in these markets, because the best is yet to come. So let's go ahead and dive on into it, because we got some major things that I want to talk about. Naked crypto. Yeah, right. So, I mean, you know what, guys? I mean, we've been doing this for years. I've been in these markets for about 10 years. Some of you have been in about half a cycle. Some have been about 2 cycles. Some have been about 3 cycles. In fact, let's see it right now in the live chat. Let me know what your born on date was. The first purchase, I don't care if it was $1 worth or 1,000 or $100 million worth. Don't even put the amount, but what month and what year. What is your born on date? Let's see it in the live chat. And if you're watching this later, drop it in the comments down below. I know we got people here from YouTube. We got people here watching live on X. We got people watching on Rumble. Shout out to each and every one of you wherever you are tuned in from. But let's go ahead and dive on into this, because we got some major things again. Let's dive into this together. What do we got? We got the fear and greed index setting up, in my opinion, for what looks like a good buy opportunity that is going to present, because the majority of market participants have no effing idea what is going on. They are emotional slaves to what their actions are in this market. So when you see something like this and people are getting fearful, that typically starts setting up for the best buys in the market. So this to me is very, very attractive. And when we look at this, of course, over the last 7 days, let's actually come up here. Let's go to my watch list. So hopefully I'm logged in. Yes, I am. Okay, let's go to the last 7 days. We got Makers up 13%. We got Solana up 6%. Bitcoin up 1.11% optimism, and then everything else is in the red over the last week. But now if we look at the 24 hours, you notice Makers made most of those gains here in the last day. We got Ondo up 3%. Major news with Ondo coming out in tomorrow, actually, with their global markets going live. So it'll be interesting to see the price action and how that plays out in the next couple days. But then we also got Pinlink up 2.5%. Excuse me. Aerodrome about 2.2%. Bitcoin, everything feeling a little bit flat right now. Man, I got the hiccups for some reason. Everything feeling a little bit flat right now. But when we come over here and look at the charts, I highlighted this at the very start of the show. What we are seeing is nothing short of bullish miraculousness. What is it? Well, we have the price action, much like this, with the breakdown, sideways action, a pump up. But notice this gets rejected, and this first rejection really forms a trend line here. Then we broke back down to the same trend line established right here, and we bounced at this zone, came right back up into the same trend line that we just discussed a second ago, and now we're getting a slight change of gears in the market. And what is that? We got the breakdown, the sideways action. Well, we had this before, and then the pump. Okay, we got the pump, but the difference here is the fact that, one, this has been setting up, which I've been sharing for you on my Twitter, which I'll show you here in a second. I've been sharing this with you guys. The setup has been here. Look at this bullish divergence. It's basically really started back here, but it wouldn't have really formed until this drop here, because at this point, this is where you get the higher lows on the RSI. The strength is higher here while the price is lower. Price fell further, but there's underlying strength building up. It's like somebody's just getting hyped up for that move, and that's what we see. The market then basically creates this base, and now the move has now broken out of this downtrend resistance, come down, retested it. If we zoom in on this, see this perfect Bart Simpson pattern, comes down, bounces not only on the descending diagonal trend line that we have here, but also all of these tops that came across right in here. This is the price came back. 2 points of intersection with the horizontal point of previous resistance and the diagonal point of previous resistance intersecting. And this is where we came back to test. The bulls came in, boom, popped to the upside. Now, when you look at this on the 8 hour, notice, it's a 4 hour, my bad. When you look at this on the 4 hour, notice this right here. We had this, oh my God, it's scary. Is it going to go? Is it going to go? Well, we have the bullish divergence that we've been talking about setting up into this, and then a massive flip. Boom, right here. Let's do option V right here before the move, before the breakout and retest. We get basically a flippening of the money flow coming out. And then all of a sudden, we water in the grass, baby. And what do you see? The trees are blooming here to the upside. Does this mean the bottom is in? Does this mean we're about to push to new all-time highs, so on and so forth? Well, let's look at it, because it may, but we need to take it one ingredient at a time. And what are those ingredients? Now, coming back over here, what do we see? This is I just shared this a few minutes ago on my Twitter, but look at this, what I shared. Let's go back 2 tweets. Now, this was on, did I do another one? I thought I did 3. This was on yesterday. Bullish divergence was forming. We talked about the potential move to the upside. And then this was last night, I believe it was. And we talked about, look at this. This was a nice indication of a likely follow through, watching for a retest of 111,700. That's what I called for, or potential quick washout to the downside if it got rejected. It did not get rejected. Money flow told otherwise. It showed the confidence of the bulls pour money into the asset. We got the breakout from there, and this is what it looks like. This was that pop-up right here, retest and launch. Now look at this number, $111,711. Again, what does this say? Watch for test of 111,700. I'm telling you guys, if you're not following me, you found your way here on accident. Well, you are lucky, because we've been keeping you guys on the right side of the trend for the better part of the last 3 years. That's just on this channel, let alone the work I've done with the Hit Network the last several years, and the Crypto Jeb show before that, and my Twitter that's been really publishing content for about 5 or 6 years. But the BitLab show is about 2.5, 3 years old now. But I've been keeping you guys on the right side of this trend. I hope you guys are not just taking my calls and making action on them. My ultimate goal is for you to learn enough here that you don't even need or want to watch me anymore because you already got all the tools and the ingredients. I'm not in this to make a bunch of money off you guys' viewership. I'm out here to make sure that there's more and more people that understand how to navigate this market rather than having the market navigate them. That's why I want to provide you guys the tools, the strategies, the skills, so that you have that bucket of ingredients so that you can dominate this market, not stop, basically stop having the market and other market makers and other big money players dominate you. They've already made the money. Stop giving them money, okay? So now when we're coming back over here and we realize this, oh, all these numbers, blah, blah, blah. Here we go. Crypto market cycle indicators. Very, very simple. Very simple. We come over here to CoinMarketCap, go to cryptocurrencies, and then you come over here to market cycle indicators. Free tool. This is a free tool, everybody. Free tool. And what is it? Well, when you scroll down here, first off, the pool multiple, this has to do with basically miners' profitability. Undervalued. We're kind of in the neutral zone towards the undervalued. We're not anywhere near that cycle top as it pertains to what we could see based on previous cycle metrics for getting near tops. And this is as dictated by what's going on with the miner revenue, which has a pretty big impact on the market. And then we look over here, we just scroll down, market cycle top indicators. And we got 30 of them here and not one of them has triggered. We are nowhere near the top. In fact, we're setting up for an incredible 2026. The question is going to be, and everybody has right now, September is always bearish. September is so bad for crypto. Well, we just had a down month in August. Maybe this September kind of breaks that mold. We're starting to get this sort of momentum, this momentous sort of aggregated data showing that the things that have been in cycles past are starting to break trend this cycle. And that's large in part because we have a different administration right now in power. We also have different SEC chair, the head of the SEC. We also have, all the quantitative tightening that's been coming in over the last several years is now coming to perceptibly an end where that FOMC meeting is only about 15 days away to get those rate cuts. Now, is that a good thing or a bad thing? The moral dilemma, who cares? That's not what you need to think about when you're looking at the market. When you're looking at the market, you're trying to predict what is going to be the investor sentiment going into that and following after those things, that thing or whatever thing we're talking about happens. You're trying to predict the swings, the ebbs and flows of the bullish dominance or the bearish dominance in the market and when those changes occur. We just endured some bearishness in the market. What am I talking about? Well, we just broke to new all-time highs up here to $124,500, $124,600. And then we got this bearishness on the 4-hour chart. We're seeing this downtrend on the 4-hour chart. This does not mean a bear market. This means in the scope of the midterm and the macro chart, we're getting a small reset before the next leg higher, in my opinion. So what you want to do is not get completely chopped out because maybe you bought the top here. If it does reverse for a little bit, you don't buy up here and sell down here. That's the quickest way to completely destroy your portfolio and any potential profits you'll have in the future. We need to get more inclined to see on these dips where everybody else is scared. Opportunity, now a drop. Opportunity, this is what we're looking for. And so we got the data that was suggesting it, the RSI. We got the data also from the money flow. We got the data also from the continued corporate buying pressure. We got the data from the fact that we have the Fed rate cuts that are basically signaled are more likely than not going to happen, especially after Jerome Powell's comments at Jackson Hole being so dovish about likely doing these rate cuts, and also the CME FedWatch tool. The question is going to be, what does the bond market say? And we'll get into that as we get closer, I would say next week, if it actually does look likely or not to get those rate cuts. Because as it's setting up right now, I'm still of the opinion we're going to be tackling those numbers that are much higher. We've got this chart mapped out that we've been looking at for quite some time. And if we zoom out on this, I'm still looking at this $158,000 target. I'm still looking at more likely than not something north of $200,000 this cycle. So when we're looking at the price action as it stands right now, and we realize not only is this broken out, this massive this rising trend line here that was previous resistance all the way through. And we just really broke through it for the first time and retested it. Now we're getting that, what my opinion is a pretty big bear trap below this. I think this is going to end up proving to be a slingshot to higher prices. So let's keep our mind about us and realize that this right now doesn't necessarily mean we're going to tackle those higher highs right now, but it's starting to set up for the ingredients, because although we have broken out of this, there's something very critical we need to pay attention to. Now, what is it? Remember, we've got this massive gap that is directly above us. Let me zoom into this really quick. This massive gap that's directly above us. Let's go to the 4-hour chart. Here we go, right there. This is that gap. Let's go on the 1-hour chart, actually, and we can see this massive gap that formed August 22nd is still above us. So even with the price action moving up, this feels so good. You've got to be a little bit cautious in terms of, if you're going to buy here, great. Understand what your time horizon is. Understand about when and where and what the reason why you're going to exit, if you're going to exit at some time in the near future. For instance, if you're actively trading on the 1-hour and 4-hour chart, then the macro talk doesn't really impact what your considerations are. But if you're on the macro chart and we're talking about trading, that shouldn't impact your macro decisions. You got to understand the time frame and time horizon that you're looking for the investments you have in the market. So while this does feel good, with the movement up, oh my God, it's moving up. Great. Watch for what happens when the price enters this zone between 113,000, just under 114,000, 113.8 up to about 116, because this price action can legitimately push up, maybe reject here first time, push up into this, reject, and then basically continue to break down like this and sweep those lows and really freak people out. But I'll be a buyer here. I was a buyer here. I was a buyer here. I'll be a buyer here as well, because on the portfolio allocation that I'm buying for on these dips is a long-term portfolio. And now also, this has nothing to do, when I'm looking at this and understanding price levels on Bitcoin, doesn't always have the same impact on what my decisions are in the altcoin market. Now, when we're looking at this, we still have to pay attention to what the likelihood is of, if this does set up, for instance, let me go like this. If this does push up into here and, bounce here and clear that, great. Then I think we're tackling the new highs. We got to watch what happens in terms of the strength as we enter this zone, about $114,000 to $116,000. So just make note of that, okay? Now, the next thing up I also wanted to pay attention to is when we look into 2026, I mean, based on the sort of global liquidity cycles, which there are cycles, the outline here in red is sort of the perceptible global liquidity cycle. And then you actually see the global liquidity index and how it overlays with that. It's not exact money on money. It's not the same exact move every time, but it gives a general outline in terms of pulling it up and then pulling it down and pulling it up. Look at this, pulling it down. These two tops very close. This one offset early, this one offset late. And then in this back here in 2016, it was a little bit weaker. And then back here in 2021, a little 2021 into 2022, of course, this is post massive money printing. We got a pretty big swing to the upside here. And then the subsequent crash after, when everybody, basically all the quantitative tightening, right? But now coming back to where we're at here, it's kind of basically right in the median, right in the equilibrium of all of this. It's my opinion that we're going to see see how this spike is much lower than it normally is previously. I think we're going to get a mirrored response with the global liquidity actually exploding higher than we saw back here in 2021 and 2022. Maybe something that looks back here like 2010. Why? Because we have all of this issue right now with global debt. It's not just the US, it's the world over. In the US, we're pushing up north of $37 trillion in debt. Our deficits are getting bigger. Our government spending is getting bigger. And yet somehow we're at the end of the rope. They have to raise the debt ceiling every freaking quarter, it seems like. They're going to have to print more money, and that money is going to find its way into the system. So when you understand that and you realize that money printing's terrible, we have the exit, we have Bitcoin, we have the other more degen plays that are there in the altcoin market as well. You just need to be a little bit more considerate, but I do think a lot of liquidity is coming, and this is suggesting that we still have quite some time into 2026 that will likely play out. And that's not even considering when we look at this as it relates to Bitcoin. And remember, this is going to be one of the major drivers of the entire crypto market. If Bitcoin crashes and goes into a year bear market starting in October, where a lot of people think based on the 4-year cycle is going to happen, then you've got to understand that the risk on, risk off matrix in the entire crypto ecosystem is going to hinge on Bitcoin, and now Bitcoin, of course, and Ethereum. Ethereum's obviously getting propped up massively right now with all the Ethereum treasury companies, which is a good thing, but we need to make sure that one persists, and two, what it looks like going into the end of this year and what we look like, I would say, at the end of Q1 to really understand what's happening. But when you look at Bitcoin over the last several cycles and the sort of the business cycle signals, look at where this peaks, cycle peak. Look at where this peaks, cycle peak. Look at where this peaked, cycle peak. And then yet again, look at how low we're at. We're nowhere near what you consider based on this metric a cycle peak. In fact, you can even tell here on the histogram here across the middle with the green and the red, we haven't even flipped into this part right here. So let's assume, let's play pretend. Let's act like this is right at the zero line. Look at where that was in the cycle. Look how much was left. Right at the zero line. Look at how much was left. The parabola was left right here, right where it flipped. The parabola. So again, we're basically in reality somewhere about right here, which is so much earlier in this cycle, right about right here. So much earlier in the cycle, right about right here. So much earlier, and yet people think we've topped. I think we have to do a lot more work this cycle than people are expecting. And so that's why I've dubbed this crypto cycle from the bottom back there in December 22 to where we're at now. It's the cycle of broken expectations. Does that mean it's not bullish? No, it means it's very bullish, but people keep expecting on every time we get good, incredible news like the ETFs, like the election, like what's going on with all the new positive legislation, with the new SEC head of SEC, with what's going on with the money printing that's going to happen. Everybody, the corporate treasuries, the ET, everything. Everybody's expecting that we're going to get the parabola, but at the same time, all of those things have brought in more and larger corporate and big money players in the space. So everybody wants to get as much. They want to get as much Bitcoin as possible. And so what we've seen, the reason why I say it's a cycle of broken expectations is because when you come over here and look at this, let's, for instance, on the weekly chart, look at this. This is where the cycle bottomed, December 2022. You see the date on the bottom? So the December 2022 and to the start, January, the retest here is the true start of this bull run. But this just has just been like very, very, stepping stones to the upside. And now we're at that additional caveat of now we're at the end of the 4-year cycle. So we must be at the top. But at the same time, being at the end of the 4-year cycle, while everything's stacking up to have more capital access and channels that are, in positive discourse on government levels about this and integrations, I do think this is going to persist to the upside. I'm watching for a big sell-off at some point, probably between now and the end of the year, that's going to really captivate people's minds and capture them thinking that the 4-year cycle is still 100% on, when in reality, I think we're only going to rebound into 2026 and push higher. But then you look at other things like the ETH to Bitcoin pairing. The ETH to Bitcoin pairing, we talked about this last week. Price action came right into a multi-year trend line. Down back here in August, September 2022. ETH to Bitcoin pair has been in the downtrend now. This was before we basically identified. This is still lower lows all the way through, even right here where this rejected. Now this is 1,092-day downtrend as we measured here. And in fact, this would be longer because we've had a few days since we've done that. So let's look at this. Hold on a second. Where is this? Boom, boom. So yeah, this would be 1,106 days in a downtrend. Now, on the near term, we have had this nice move from where we're at right there to where we're at here, 119 day. It's basically small time frame, mid small time frame, about a third of a year. We've seen ETH starting to break to the upside, but we have not yet been able to break past any of these range lows. So while this feels good, we have a lot of work to do for ETH to really start breaking the narrative of Bitcoin outpacing the altcoin market as a whole, as it has. Now, this is not the end for ETH to Bitcoin in terms of this run, but what we have seen in any bull trend ever, we talk about this regularly: rise, retrace, continuation, retrace, continuation. Sometimes the retraces are just consolidations. And right now, we can actually adjust this because this is now since kind of changed. Option T, come to the top there. It's very ugly. Falling channel here. And look at this. This is kind of testing into this range here. The strength is very, very low, but it's getting into these sort of, look at this. See where this came down? See where this bounced back here? This is when everybody was so fearful. It's over. Boom. And then again, this came down quite low right here. Now, this is lower than this was. I do think we will get a bounce soon, and I would expect it by the middle of the month. And we're seeing this play out in the other assets as well. Link, for instance, I shared this on my page a few days ago. Now, while the price was up here in 25, 26, 27, I talked about potential washout to come back and test this level, which is at $20. And then what happened was large bullish impulse, much smaller bullish impulse. And now look at this. We broke to a new, right from this range, a lower low followed by a lower high, which formed this head and shoulders. And I shared this last week. The measurement on this, see, from basically from this trend line up to the top of the head, suggested a potential move that comes down here into sub $20, which would be about a 20% sell-off from this level up in here. Now, do I think if this does continue to the downside, we're going to hit 19, 18, somewhere in this dollars? I personally don't think so. Why? Because we got all of this price action right here. I think this would be a bit of a bear doomer trap to expect the price to come back to 19 or 18 if the rest of the market isn't completely nuking as well. And the reason why I say that is because when you look at all these things tied together, when you look at S&P 500, I want you to notice something. This has been arcing over. It's getting weaker coming over like this. Okay. We also have bearish divergence on the RSIs coming as far back here as, look at this, July 2nd, all the way to where we're at now, forming a pretty big bearish divergence. Money flow, bearish divergence. It wouldn't shock me if we got a pretty big washout on the markets, which I think would spill over into the crypto market as well, coming down here, retesting down here in the 6,100 level, and then potentially getting a bounce if the bulls come in, or potentially having that very hard 1.5 year bear market like everybody's talked about. So we got a couple different bullish things, some bearish things, some scary things. And so when we're talking about Link, for instance, with this massive head and shoulders, the target down here, if the S&P 500 SPX doesn't break down, if we get the rate cuts and the market all reverses, then I think this right here is just going to be a bear trap. And look at where this came to, right to the level that we had before. We had this on the chart. This is previous range lows over here, all this. And look at where the price came down to. Came right down, bounced on it currently. If this does come down a bit further, I would expect a bounce somewhere in this range, right in here, basically 21, maybe a little lower, down into the $20.30, somewhere in this range. If this does break lower, this is where I think that we'd come. But I want to share my bias with you. I have a data experience bias here that although this looks so bearish and the setup for the move down here, I think it's a big trap. I think this is a big trap. I think this move, it confirmed, it's coming lower. I think coming somewhere in this range, basically we already came down to $22, but testing back into 22 down to 21.70, somewhere in here. I think this is going to be most likely as low as it gets if it's the trap setup. If the market just has a big washout, something major happens, Trump's in the hospital and the markets have this big correction, then yeah, we're going to get the target that the price action has mapped out as what that likely level is going to be. But remember, Chainlink is only getting more integrated across TradFi, across crypto, across everything out there. So if this gives us an opportunity with price down here, sub $21, I would be jumping at the opportunity for that. Ondo, global markets, tomorrow, guys. Now, I haven't looked at this since the end of last week. I like to do most of my TA with you guys on here or in the Discord when we do the members morning streams in there. And we did one this morning with Drew and I. We talked mostly about Bitcoin and ETH, but we got the global markets. Should be going live tomorrow with, I think it's 100 assets they're bringing on chain. Apple, Nvidia, Microsoft, a bunch of PayPal, a bunch of different stocks. Now, what we're seeing here is, we've talked about this before. This does look like it's trying to form some potential inverse head and shoulders, which I think would be a nice, beautiful, bullish slingshot. The question is going to be, this is one of the considerations you have to have when you're looking at something like this. You're so excited because Ondo global markets are coming tomorrow. It doesn't mean tomorrow the price is just going to go like this. It doesn't. I'm sorry. It could, but it's, I would say, less likely than not. And I'll tell you why. Is Ondo Global Markets going live tomorrow super bullish? Absolutely. But what happens is you have expectations that are imbued and entangled within the market. And what happens is, all of us that are in crypto, we're investing in Bitcoin and Ethereum and Chainlink and Ondo. We're so excited about all this. We think the world knows what all's going on here. They got no freaking clue. And so if Ondo Global Markets goes live tomorrow, which it is, and the data comes back and it has $1.2 million in trading volume, other than having the excitement of this new fundamental change of U.S. stocks, major U.S. stocks now being available to the globe. They're on global markets. That's what this is all about. That's why it's so impactful for these stocks to go on chain so that they can be traded in a global marketplace. But if the marketplace out there and the appetite doesn't actively really utilize that in the first 48 hours, then I think you're going to get a bit of a sell-off. Does that mean it's over, it's dead? No, it doesn't. I think, in fact, that would create an incredible buying opportunity. But when you have so much expectation, especially with all of us that are in a bubble, and then we see the big news play out, what is the trope? Buy the rumor, sell the news. Now, I'm not telling you to sell. I'm just saying to limit your expectations about what price is going to do between now and tomorrow, because global markets is going live tomorrow. To me, this is starting a fundamental shift in the global financial structure. And so regardless of what happens tomorrow, if it dips, I'm buying more. If it goes up, I'm already stacked. So this is why it takes precedent to prepare over time. Now, Solana. What do we see on Solana? Solana is inching into this zone that we've been talking about, guys. The zone that we've been talking about is in that $215 to $225 region, and we're back up in the zone. And remember, this trend line that we're looking at is a major trend line, much like we saw on Bitcoin. What am I talking about? This major green trend line right here. This goes back to 2021. Major trend line. This is fighting to actually fully break away from and have support above. Solana, very similar. We have a multi-year trend line that goes back to 2021. Look at this. November 2021, resistance. Okay, resistance, resistance, resistance. Support, support, support. Resistance. Chop. Okay, we broke out. We found support and launched. So this is finally the first time we've really done that, but it's not, because it just happened right here. Because you broke out, found support, doesn't mean absolute all systems go. You got to be a little cautious here. I think this is where people wanted. The market had that, bit of a sell-off after, the beginning of the year. The whole market did, not just Solana. And so this time we have rejected, breakout, retest, launch, but we're not really getting the pop here. We're getting a little bit of a bearish divergence on the money flow, if you ask me, a little bit of a bearish divergence on the RSI. So although this is exciting, I don't think we're quite there yet. I think we're still in hesitation zone going into the FOMC meeting in about a week and a half, 2 weeks. I think it's September 16th, 17th or 17th, 18th. But this is a good start. you know, and don't forget where Solana came from, guys. If you wonder why Solana's not giving you good returns, well, it's giving you a lot of opportunity. Look at this. Look at the price over here, sub $8. What do you mean Solana's not performing well? No, you bought it at the wrong time. You don't need to continue to wait until something, oh my God, it's so bullish, and then you buy up here expecting the same run. You're out of your freaking mind. It's out of your mind. But hold on one second. I'm getting a call. All right. Sorry about that. But does that, am I saying that Solana is not going to perform? No, I'm not saying that. I'm saying this, remember how scared everybody was here? This was a great example of buying fear. Okay, you didn't want to buy here. You see the breakout up to here. It didn't quite break out. Just came back to this range low angle. But then right here, we have a higher low right here. So this would have been a great opportunity. This would have been in the, you know, the 23s. That still would have been, look at that. That would have been a 1,400% gain. Same thing is true with on all these other assets that we're looking at, that we've seen big returns and big opportunities that sometimes we passed on. Even Aerodrome, which we love, massive opportunity there. Look at that, 2,300%. That's basically a 23x. But then it sold off. Oh my God, it's over. But if we're excited here, where Coinbase bought $100 million on the open market, boom, the reset here, higher low, W formation, cool. Great opportunity yet again here. The market's been giving us opportunities to trade and to stack long-term, but this movement is what really messes people up, because this is exciting and you don't want to lose it, so you buy here. And then you get scared, so you sell here. Stop doing that. We're getting some major things setting up coming into the middle of this month. So we just want to pay attention to that and realize that, guys, the number of addresses holding more than 100 Bitcoin just hit a new all-time high. And it's not just 100 Bitcoin. We also see the chart is also interesting, showing that people holding more than $1,000 worth of Bitcoin, 13 million addresses. It might not mean people, because some people might have multiple addresses, but we're seeing the stacking of our lifetimes and people are worried. And then you look at this, get through September. We all know what's in store. September historically is bad. However, we just had a fairly bad August. Maybe we get a flat month. Maybe it's green. Maybe it's, but look at October and November. This is where all the gold lies in the historical trend of what we're seeing in these markets. So everybody stack in, stay long, do what you got to do for your portfolio. Do not get overexposed. I got to run because I got to take a call, but I love you guys. I appreciate you guys. We're back in action now. I'm in the new office. We're going to be doing a lot more member streams. So if you're a member here on the YouTube channel, you're going to be access to those. I'll be sharing some stuff for you as well. If you're watching on X or Rumble, big love to you. Make sure you're following me over here on YouTube as well. Make sure you follow me also on my page here at Kelly Kellam. But make sure, you know, just hit that like button right there. It's that easy. Zoom out right now, hit the like button. Oops, hit that like button. And you know what I'm talking about? Hit the subscribe button, join, become a member. It's about $1.25 a week. You'll get access to the member streams. To show you where those are when I do those, I do it right here in the posts section. It might say comments on your page, but this is where I post it. I put the links in there, so for you to get access to. But I love you guys. I appreciate you guys. That's all I got today. Adios, muchachos. Thank you for coming. Thank you for always tuning in. Stack in those portfolios, hold long, and be like a rock. Adios.